Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now, it's a wet morning here in Singapore at the start of what is a brand new week, and of course we hope that comes after what was hopefully a relaxing weekend for many of you. Now, in financial markets, this week is set to start relatively quietly, but there are some key data and events due to the end of the week that we think will be pivotal, and equity markets seem poised at an interesting point from a technical standpoint. So let's jump into the three things we'll be focusing on in the week ahead. Now, first, of course, is US inflation data. The US is set to release CPI inflation data for May on Friday, and the key focus will be whether inflation has or is in the process of peaking. The consensus is looking for no change from last month's 8.3%, with expectations being in a relatively tight range around this. Now, whether we've achieved a peak or not is key because we've seen several Fed policymakers state publicly that whether inflation starts to ease later this year will be one key factor that helps decide whether the Fed starts to slow down the pace of its rate hikes from the 50 basis points expected at the next two meetings. Now, our own view is that inflation should indeed start to slow somewhat later this year, but it's possible we may need to wait till the second half itself before we really start to see that come through in the data. Now, that leads me on to my second point, which is that a quick look at the market backdrop shows that why this data release may be so important. Now, last week ended up being another week where US equities closed lower, following just one weekly rebound, and several technical analysts have pointed out that the S&P 500 index appears to be stalling around technical resistance at 4160. Now, while there are few strong directional signals from technicals alone, a map of key levels shows us that on the upside, the index would need to break above several resistance levels for a stronger uptrend to come through. There is, of course, the 4160 resistance. Then there is the 50-day moving average at 4250, and eventually, of course, the 200-day moving average up at 4450. On the downside, support sits at 4000, after which the next support is further down near previous lows at 3800. All of this, in our view, suggesting that narrow trading range is possible until we get a strong catalyst from the data. Finally, we'd also focus on several key data releases and events outside the US as well. Over in Europe, the ECB is set to meet on Thursday to set policy rates. While there's no expectation of a rate hike at this meeting, there is likely to be an unusual amount of scrutiny of any signals on the path of policy rates in the second half of this year. Recall that the ECB's chief economist had set expectations at 25 basis point rate hikes at the next two quarterly meetings being the baseline. But markets have started to question whether either of these ends up being 50 basis points in size or whether another rate hike is possible between those quarters. As we've said before, rising rate expectations could be one positive factor for the euro, at least in the short term. And here in Asia, India's central bank meets on Wednesday, and consensus here is looking for a 40 basis point rate hike. China also releases inflation data on Friday, where the focus though is likely to be on producer prices for any signal it may provide on supply chain pressures. Note that China also releases new loans data this week, which is quite critical in our view given the uptake in the credit impulse is one bright spot in the Chinese economic data landscape. So quite a bit to focus on, and what we'd say is it's a backloaded week that at least until then could be characterized by range trading, but do watch out for equity and FX market opportunities all of these big events could create. We'll take a pause there. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.